Hi, my name is Zeus Kang. I'm the CEO and co-founder of Husby.com. In this video, Husby University presents how to review offers. Congratulations! You spent time getting your house ready to go on the market and have finalized putting the finishing touches. You've listed your house and have shown to some fantastic buyers. Once you receive an offer or multiple offers, you will now have to review them. It is imperative that you carefully review all aspects of the purchase contract. Once agreed, these terms will be legally binding, so it's important that you've read and understand what you are agreeing to. With that being said, here are a few key aspects of the purchase offer you want to pay attention to. Offer price. This is the amount of money that the buyer is offering to pay for your property. You will need to determine if the offer price is acceptable to you or not. Payment type and structure. The payment type is how the buyer intends to pay for the property. Typically, there are two general ways to pay: cash or a loan. Cash. Cash offers are usually the most attractive to a seller as they are not subject to bank or underwriting guidelines. This means the buyer has cash in hand that they are willing to use to purchase your property. Cash transactions often are able to close quicker as they are not subject to lender underwriting guidelines. A proof of funds in the form of a bank statement or a letter from the buyer's financial institution which states that the buyer has sufficient funds to cover the cost of the home should be reviewed and approved by the seller. A loan. Most properties are bought and sold using borrowed money. Whether it's with a bank or a credit union or a government, the money is loaned to the borrower. Keep in mind that borrower has to meet all required underwriting guidelines that the lender has set forth to qualify for the loan. A pre-qualification or pre-approval may not necessarily mean that the buyer is qualified to borrow money. So it will be up to you to contact the buyer's lender to ask about the buyer's financial qualification. Husby requires all buyers to submit a pre-approval document for financing offers and a verification of funds for all cash offers when submitting an offer. We highly recommend taking a close look at the aforementioned documents and contact the lender to verify financial qualifications if the buyer is intending to secure a loan to the purchase. Contact information for the loan officer and lending institution can be found on the pre-approval letter. Down payment. A down payment is a sum of money that the buyer pays in the early stages of purchasing a property. The down payment represents a portion of the total loan and typically serves as proof to the lender that they have made the financial efforts towards obtaining a mortgage loan. A larger down payment may not necessarily signify a more qualified buyer. That's why it's highly recommended that you contact the lender to inquire about the buyer's financial qualification. A cash buyer will not require a down payment, just an earnest money deposit which is made in good faith to the purchase. Husby Pro Tip. Most lenders use 20% of the sales price as a benchmark for a down payment for a highly qualified buyer. A down payment that is lower than 20% of the sales price will typically require the buyer to pay a private mortgage insurance or PMI. Once the loan to value or LTV is below 80%, the PMI may automatically cancel or the buyer may have to request to stop paying the PMI. Offer deadline. The offer deadline is the amount of time that the seller has to respond to a purchase contract submission. This deadline will be based on the date that the offer is submitted. For example, if the purchase offer is submitted on July 10th with the 5-day deadline, a response is required no later than July 15th. If the response is not received within the deadline period, the purchase offer is considered null and void. If you wish to submit a counteroffer, the counteroffer will have a new deadline. The seller has the option to accept, reject, or submit a counteroffer with counteroffer terms. Husby offers a very powerful offer management feature on the user dashboard. Closing date. This is the date that the sales of the property will finalize. Keep in mind that each marketplace will have their own respective terminology and order of process. For example, in Hawaii, the recordation date, the date in which the buyer receives keys and official ownership of the property, occurs 2 days after the loan has been funded by the lender. Therefore, in Hawaii, the funding date is actually considered the closing date. State of Hawaii. In the state of Hawaii, there's a lot of confusion surrounding the closing date for real estate purchase transactions. Official closing date is more technically known as the settlement date. Recording date in Hawaii and does not occur until the day the transaction records with the State of Hawaii Bureau of Conveyance, 2 business days after loan proceeds, if applicable, and the home buyer closing funds have been deposited and cleared with the title and escrow company holding the transaction. This means that you will receive keys 2 days after the lender has funded the loan. So don't expect to get keys when you sign closing documents in the state of Hawaii.